Hello, I'm excited to have you join me on this training. Once more again, this is Soji and you're welcome to Soji Forex. Thank you to all our new subscribers. In today's video, I'll be showing you exactly how you can trade the Bollinger Band and the moving average cross strategy. Bollinger Band and moving average cross strategy. The setting for the Bollinger Band is period 130, deviation is 2.0, the shift is 0, and you apply to close. So you do the saving so that you can do the setup on your own. Then afterward, we have our moving average. And the period is 25, shift is 0, the method is exponential. And then we have our second moving average, the period is 10, shift is 0, method is exponential. We have our relative strength index, the period is 9, you apply it to close, the style is 1 pixel. Okay, so this color should be your background color. So if your background is black, kindly change it to black. That's because we don't want the the relative strength index to display on our screen. Then we have our commodity channel index, the period is 14, apply to typical price, high, low, close 3, and if you've done that correctly, your chart will be looking exactly like mine. So the question is, how do we take advantage of this strategy? Now, if you consider this asset, GBP USD has been bullish over time. How do we know it has been bullish? We have established on this channel that one of the functions of our Bollinger Band is the ability to help us to determine the trend of the market. Regardless of the time frame you are viewing it from per time. And in this time frame, this is a 1 hour time frame. So based on this 1 hour time frame, we are in an uptrend. And why do I say so? Because price is above the middle Bollinger Band. And so in this strategy, we are looking at how do we trade the Bollinger Band and the moving average cross. The crossing we are referring to in this video is we want to see the moving average 25 exponential EMA and that of the 10 cross the middle Bollinger Band. And this cross is what happened in this zone. So immediately we get that cross, it has established that we have a change of direction and we want to see price being sustained over it. So once you get this cross, what is the next thing you want to look out for? Remember, this strategy is not just indicator based. It is a combination of indicator and the price action. So our focus first is on the price action. So the price action is our primary factor of analysis, while the indicators are only used for secondary confirmation. Having said that, we have this cross, and for this cross to happen is a function of price action, because it takes a price action for price to move. So remember, we only use this cross to determine the trend, not to buy or sell. So just like every other person you might have heard from, that when the moving average cross you buy. No, that is a wrong way to trade the moving average. Now that this has crossed, remember, price has crossed and price will have moved a distance before you see the moving average making this cross. So if you should have said because it has crossed, maybe when this cross happened, price is already at this zone, and you now say, oh, because it has crossed, let me buy. Immediately you place your buy, price begins to pull back. And then you keep imagining why this strategy is not working. It is not because you are always doing the wrong thing. And that is why this video is meant for you in order to correct your narration and to give you adequate knowledge on how you can trade the Bollinger Band and the moving average cross. So now we have this beautiful cross. So whenever this cross happens, you will always need to wait for number one. Wait for a pullback into the moving average. Be patient enough for price to pull back into your moving average. Number two, if price did not get a support in the moving average, there is a tendency you need to wait for price to pull back to the middle Bollinger Band. The fact that price break through the moving average to the middle Bollinger Band does not equal a change of trend, because price is expected to break this and retest somehow the moving average and then continue back to the upside to validate that we are now in an uptrend. So this move back to continue will be something you will always want to call a higher low and a higher low. And to this, you can easily connect your trend line this way. But so, in either way, price has left here and it has breakout. So you will always need a higher low formation. So this higher low formation can either fall on your trend line or on your moving average. So this can pull back here and then continue to the upside. So which means here is our higher low and here is our higher low, while it begins to give us a new higher high and higher high. So immediately we spot this cross here, we sight this cross. Remember, always wait for a pullback either to the moving average or to the middle Bollinger Band. When that pullback happens, just as this, as the pullback is happening, all you need to do, pick up your trend line. This is your trend line. You pick it up and you draw it this way. The reason I draw it very long this way is because perhaps the pullback can be to the middle Bollinger Band. But however, if it doesn't, you are already on your watch. And as this is happening, price has already been pulling back. We are now looking for opportunity to buy because this is an uptrend. Now we are not just going to buy because already we are seeing a pullback. So we also need a signal to let us know that this pullback is coming to an end and that we will also as well need a presence of a buyer. So one of the way we can validate this is by getting a candlestick pattern. And if you look at this scenario that happens here, why this pullback was happening, we begin to have this rejection. So we'll have this rejection, then we'll have this hammer. You can see that rejection, and then when we begin to see the weakness on the part of the seller, we were patient enough to see price break out of our trend line. So when we have this close of price out of our trend line, we'll be buying there, and then our stop loss is 10 pips below the candlestick formation. And having established that, we want to see that our commodity channel line is crossing above the level of 20, or let it be crossing 50. In any of these, it is a valid entry. But if this is happening and the commodity channel index line is in between just this zone, you need to be patient enough. If when the candle is forming is not coming from 20, you don't have an entry. And if when it is forming it has not crossed 50, you do not have an entry. Very much important. Now, another thing to pay attention to, remember, we always say that when we determine our trend, we mark out our point of interest. What is our point of interest? Our point of interest can be a fair value gap, which is an imbalance, improper price action. It can be support, it can be resistance, it can be another block. But in this scenario here, we are having a typical smart money cube. So you can see that this This bearish candle that you are seeing here is what we refer to as a smart money cube. I'm referring to this particular bearish candle. A smart money cube is an opposite candle that is formed in the midst of series of a similar candle. So in the direction of the trend, we will want to see price go up, pull back to retest it, and when price pull back into the zone of the smart money cube, in an uptrend, we want to see it serve as a support. And beautifully, as you can see, this smart money cube went on to serve as a support for this price action. And while that was happening, we have a double confirmation. It also fell into the zone of our moving average, and that is a valid entry. So on a 1 hour time frame, you'll be using candlestick formation to make your entry. Two types of candle, a bullish engulfing or bearish engulfing, them a hammer or a pin bar. But when we come to our 15-minute time frame, let's find this entry on our 15-minute time frame. So on our 15-minute time frame, remember, we will want to see a divergence regardless of the time frame, which shows us that this is the end of the pullback. And here you can see price is giving us a lower low, and then look at our indicator window is giving us a higher low. So this validates our confirmation. So you can either make your entry on a 1 hour or you can make your entry on a 15-minute. So you can see that this continue. Here again, we have this pullback into the moving average. So you just pick up your trend line and you mark it. You are still above the middle Bollinger band. So you don't have any business looking for a sell trade. And afterward, this crossed the level of 50, and then you can see that breakout here for you to make your buy entry. So this is exactly how this strategy works. Very much perfect. And in this zone again, we have another one here. You can see the pullback of price, and if you pay attention to this carefully, you will get a divergence. Look at this. Here is a divergence in this zone, and look at the candlestick formation. You can see the rejections and that pin bar. But however, you can be patient to wait for price to cross above your moving average. And here we have that cross. See that candle formation, that will have our buy entry. So you can go on and on and on to do this. The opposite is for a sell. And because I don't intend this video to be long, here again we have another one. A beautiful one there. So we have this cross our 50 zone. Since it crosses the 50 zone to the upside, we'll have our buy entry, we'll have our stop loss, and then you see that price plays out. So I believe you find this video helpful. Please do not forget to give this video a like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you for watching, and see you in the subsequent video.